On Business Incorporated today, Kenya's court scuppers President Kenyatta's minimum tax plan. Morocco looks to mop up record FX levels with buyback plan. And a new report by Nigeria's National Bureau of Statistics and UNDP shows 20% of the full-time workforce in Nigeria lost employment during the COVID-19 pandemic in 2020. Hello and welcome to the program. I'm Chimeze Obi Iwagu. First, the intraday market numbers, and major markets on the African continent were trading mixed at intraday. Nigeria's all-share index was in negative territory, down 0.06%. Meanwhile, South Africa's JSE index was up over 1%, recovering from yesterday's big dip. Egypt was much lower, down 2.05%, and Kenya closed Monday's trading positive, up 1.24%. On the flip side, in the Middle East, the major markets we track were also mixed. Abu Dhabi was up 0.11%, while Dubai lost over 1%. In another part of the region, Saudi Arabia gained 0.10%, while Qatar was down 0.31%. And to Europe now, stocks opened higher in early trade, bouncing back from heightened investor nerves over a Chinese property developer and ahead of a two-day meeting of the U.S. Federal Reserve. For this and other developments in the European space, we have Christy on board. Hello, Christy. Good afternoon. Well, let's start off with the IPO happening today. Universal Music, of course, is making its stock market debut in Amsterdam. It's set to be Europe's biggest IPO this year. 10 years ago, the music industry was struggling to adapt to the internet era. What changed?
Yeah, that's a great question, Shimmy. I mean, if we think back a decade, what was the situation like then? The internet was really starting to come of age and really starting to become a common household tool. Music piracy was very common, and there was also a widespread idea that things on the internet should be free or could be had for free in any case. And this raised a lot of questions about whether consumers were still going to be willing to pay for music. And there was a bit of a crisis for the music industry in the same way that there was for publishing at that same time. Obviously, back then, it was hard to imagine the streaming culture that we all know so well today. You know, we're talking about Spotify, Apple Music, other companies like these. Now today we pay for music almost in the same way we pay for electricity or for gas, so it's sort of a monthly utility. These streaming platforms are funneling billions of dollars to companies like Universal every year. We're already seeing that the valuation is closing in on double what the IPO prospectus had laid out. So it's certainly a happy day for Universal today.
Well, another happy one there is the U.S. Now saying it will soon allow entry to many vaccinated foreigners, including most of Europe and the U.K. How has the struggling airline industry reacted to this?
Yes, that's correct. What we're really seeing, this announcement we heard from the U.S. is that, they'll be letting many vaccinated foreigners, I should say, not everyone, come in sometime early November. It's a really big vaccination push on the part of the U.S. They're very clear about the fact that unvaccinated Europeans will not be allowed to enter, and that even Americans coming back from abroad, if they are not vaccinated, will need a negative test as well. So as to your question about how the airlines are reacting, let's talk about the markets for a second. Of course, we're seeing some positive motion there for several American airlines. We saw them having gains, making up for losses that they were experiencing on Monday. And we also saw positive spikes for several European airlines. There I'm talking about Air France. We also had British Airways and, of course, Lufthansa here in Germany, all making gains today. The airlines themselves, of course, welcomed the news. This these routes from Europe to the U.S. are the most profitable for the global aviation industry, and they've been begging for these to open back up for months now. So, we also had some CEOs welcoming the news personally and saying that this is going to allow some people to be together for the holidays this winter, some people who haven't seen each other in maybe quite a long time.
That's quite interesting. All right, in another development, the EU has come out in support of France after Australia scrapped a $40 billion submarine order with Paris in favor of a US and British deal. How is the situation developing?
Yeah, that's right. I mean, we heard the EU yesterday coming out in favor of France, which makes sense, of course, since France is in the bloc here. Today, they went a step farther and actually postponed U.S.-EU trade discussions as a response. I mean, the U.S., the U.K., and Australia, who made this deal sort of behind closed doors and without France in the know, I think they're a bit surprised at the anger that France has displayed since the submarine deal fell out of their hands. This was a very valuable deal for France, not only in terms of financial value, but also in terms of a military defense. So now what France is really trying to do is reposition this whole situation as a question of the future of European defense. France has a very vested interest in having a military presence over near Australia, where there are several French islands nearby, where China is also nearby, a country that's seen as an increasing threat. So until France is not so upset anymore, I do think we're going to be seeing continued conflicts, particularly over trade agreements. So this could have wider repercussions for businesses in all the countries involved.
All right, thank you very much, Christy. We'll keep keeping a track on those developments there. Enjoy the rest of the day. And in the UK, the Office for National Statistics reports that public sector net borrowing, excluding public sector banks, came in at £20.5 billion in August 2021, with COVID-19 costs also still high. That's the second highest August borrowing since monthly records began in 1993, but £5.5 billion less than in August 2020. Juliana will tell us more. Hello, Juliana. Good afternoon. Well, data in this morning showed the UK government borrowed more than expected to balance the books in August as rising inflation pushed up its debt servicing costs. Now, what would this mean for the government at this point?
Good afternoon, Jimmy. Well, yeah, this budget deficit is coming a little bit higher than some economists had forecast, as you said, at 20.6 billion. So the budget deficit is obviously the gap between how much a government spends and how much a government brings in. So, of course, they've been spending billions over the past couple of months. But I think for the Chancellor, this is probably a time of great relief because, of course, lots of government spending initiatives, including the furlough scheme, which costs billions upon billions of pounds, is coming to an end at the end of this month. So I believe the British government finally believe that they can kind of put the biggest COVID spend to rest. Next month, we are getting an autumn budget from the Chancellor. This is a much anticipated budget. We've already had bits and pieces of spending initiatives from Boris Johnson, one of them being the £12 billion a year a gap to fix the social care crisis. So they have got more spending to do. And of course, as well, Boris Johnson's levelling up, where he plans to take some of the money that's been sitting in London and take it to the north of the country to try and win back some support from those who backed him in the 2019 general election. So yes, even though, the budget deficit is still quite alarming, I think, this is now looking back in the rearview mirror and the government want to look forward.
And the issue of rising energy bills has remained a major topic of discourse. Kwasi Kwarteng has admitted that hard-pressed families will face a difficult winter with rising energy bills and cuts to benefits. What does the government plan to do about this?
Well, that's a really important question, and it's something we're going to have to wait and see. It's certainly going to feature tomorrow during Prime Minister's questions, even though, of course, the Prime Minister is currently hosting a dinner with foreign leaders, or a breakfast with foreign leaders at the UN General Assembly. So his deputy, Dominic Raab, will step in. It has dominated headlines here in the UK over the past couple of days, the soaring gas prices. And even though there were crisis talks between, as you said, Kwasi Kwarteng and the industry bosses, the government they have doubled down on their statement that they are not going to leave consumers bearing the cost of this, because we already are going to start bearing the brunt next month when the cap is raised, which will increase bills to about £136 a month. But of course, as you know, Chimezie, the British headlines and the tabloids can run away with stories. So gas is not running out here in the UK. There will be gas to heat people's homes. I believe the issue really is the soaring prices and how some of these companies are going to manage to stay afloat.
Yeah, and a little bit of corporate news there. National Express is in talks to buy Stagecoach, the UK's largest bus operator, in an all-share deal. Tell us more about this, and of course, bring us up to speed with intraday market numbers.
Yeah, this is an interesting story about the National Express and Stagecoach. They're both two very, very big coach firms. And we know, obviously, over the past 18 months or so, travel has been completely disrupted. Nobody's been taking a coach from Brighton Beach up to Edinburgh. And as we discussed, I believe I discussed it today, that Addison Lee and other ride-hailing firms and cabs, they are all trying to consolidate some of their lost earnings by making their vehicles electric. Coach firms have to do exactly the same, and they just don't have enough money to do it, which is why a lot of people think this is going to be a win-win for National Express and Stagecoach if indeed this merger is to take place. It all is still all up in the air. Lots of this is speculation. I believe National Express have about 28 days to confirm if they are going to do this buyout, so we'll just have to wait and see. The blue chips have had a really good day. Lots of this is to do with Biden's administration confirming that the UK-US travel corridor is going to be open. Some of the biggest risers on the FTSE 100 are travel-related stocks. So the FTSE All-Share is up 1.06%. The FTSE 100 is up by 1.19%. And the FTSE 250 is up by 0.06%. In currencies, the British pound is up on the US dollar by 0.18%, up on the euro by 0.11%, and up on the Japanese yen by 0.26%. So it's up.
Sure. Good news coming out there from the US. Well, we'll continue to track those developments. Enjoy the rest of the day, Juliana.
Thank you, Chime.
And in Asia, shares were mixed today in today's trade as investors continued monitoring the situation surrounding embattled developer China Evergrande Group. Chinese stocks declined as they returned to trade following a Monday holiday. The Nikkei 225 closed 2.17% lower. Hong Kong's Hang Seng Index, which was dragged down by more than 3% on Monday, and investor fears around Evergrande sat 0.17% in Tuesday afternoon trade. In Australia, the S&P ASX 200 advanced 0.35% on the day. MSCI's broadest index of Asia-Pacific shares outside Japan traded 0.11% lower. Markets in mainland China and South Korea are closed on Tuesday for a holiday. And after the break, we'll bring you commodities market update as well as other developments on the African continent. Do stay with us. All right, let's talk commodities now. We are looking at bitumen. Well, bitumen is a viscose mixture of hydrocarbons that is a byproduct of petroleum distillation and the refining process. It is used mainly in the construction of roads, waterproofing, and roofing. Recently, the price of bitumen has increased by 24.80% in 2021. Why is this so? Let's hear from Adeye Adebusi, one of the research analysts with Financial Derivatives Company. Good afternoon, Ade. Thank you very much for joining us on the program.
Thank you for having me.
So tell me, why this jump in the global price of bitumen when the world is just recovering from a pandemic-induced recession?
Bitumen, which is also known as asphalt, is a petroleum-based hydrocarbon that can be found naturally in oil sands and pitch lakes, or can be produced artificially by the fractional distillation of crude oil. And as a result, bitumen prices are heavily reliant on crude oil prices. In 2020, as a result of the global pandemic and the oil price war between Russia and OPEC Plus, crude oil and bitumen prices sank to all-time lows. As countries imposed restrictions and closed down their economies, we saw bitumen prices go to as low as $270 per ton in March, compared to $380 per ton in January. And as the year went on, bitumen prices also sank to $110 per ton. However, with the discovery of the COVID vaccines and with the opening of economies, there has been an increase in demand for industrial and construction activities, which has seen bitumen prices increase to $270 per ton in January 2021. And right now, it can be bought for about $380 per ton in September.
Okay, now bitumen is now being substituted by construction companies and contractors for concrete interlocking blocks. Concrete roads are infinitely more expensive than bitumen surfaced roads. What is the attraction of concrete paved roads in spite of its exorbitant costs, especially here in Nigeria?
On average, a properly built bitumen or asphalt road would last about 15 to 20 years without any need for major reconstruction works, while concrete paved roads last for about 20 to 40 years without any need for repairs. And bear in mind that with the heavy rainfalls we experience in Nigeria, especially in the southern part, concrete roads are more beneficial because they are more durable and they have higher tensile strength, which means they are able to withstand heavy load and pressure. And also, bitumen is harder to maintain and is more costlier to maintain. And when you heat bitumen up, it releases greenhouse gases, which often cause pollution to land and air, which makes water and food undrinkable and consumable at times.
Now, according to the trade report released by the National Bureau of Statistics, Nigeria's bitumen imports stood at about $152.24 million in second quarter of this year, with Dangote Refinery expected to have a capacity to process about 650,000 barrels of crude oil a day. What does this mean for the competitive price of bitumen in Nigeria? And again, will Nigeria become a net exporter, or will it be used solely for domestic purposes?
In Nigeria, there are about 5 currencies currently. And with the expected completion of Dangote Refinery later this year, the refinery and productive capabilities of Nigeria is set to increase tremendously. Over 20 years ago in Kaduna, bitumen was produced, but production came to a halt because the refinery became unserviceable. And bear in mind that there is a bitumen belt across Lagos, Ondo, Ogun, and Edo states, which is said to have a capacity of about 45 billion deposits of bitumen, which is currently one of the largest in the world. And locally producing bitumen will help Nigeria save scarce forex resources rather than importing it. And the excess bitumen produced after meeting local demand can be exported to other countries, which will be a good source of revenue, would increase GDP, and will create employment opportunities for Nigerians. And of course, producing local bitumen will be cheaper and more cost-effective than importing it from abroad.
I think Nigeria has got the potential to actually be a net exporter of this commodity.
Yes, because with the 45 billion bitumen belts across the southern parts, and with the expected completion of Dangote's refinery, there should be a pickup in the bitumen production in Nigeria, and would eventually lead to Nigeria being a net exporter of the commodity.
All right, thank you very much for your time, Adeyeye. We do appreciate it.
Thank you.
And the coronavirus pandemic resulted in 20% of the full-time workforce in Nigeria losing employment during the COVID-19 pandemic in 2020. This is according to a new report released today by the United Nations Development Programme and the National Bureau of Statistics. The cuts followed disruptions to supply chains, continuing supply and demand shocks, and a drop in consumer confidence. The report, titled "The Impact of COVID-19 on Business Enterprises in Nigeria," also highlights the significant decline in revenue faced by enterprises and establishments across the country as a result of the pandemic. About 60% of the almost 3,000 businesses surveyed reported that 1 in 3 of them knew of a company that had permanently closed down because of operational challenges resulting from the pandemic. 4/5 of enterprises reported decreased production. The Statistician General of the Federation, Dr. Simon Harry, highlighted the importance of the survey results, saying that as the economy begins to show signs of gradual growth, this report contains important information that can guide policymakers in their interventions to mitigate the negative socioeconomic impacts of COVID-19 in the country. And in Morocco, the central bank has begun buying extra foreign currency from local banks as levels hit the highest this year on the back of worker remittances and a post-COVID tourism rebound. The Apex Bank says it will hold auctions as often as needed to absorb the excess. The move, which started on Monday, was aimed at ensuring the proper functioning of the market. The central bank bought back about $410 million of local lenders' foreign currency in the first transactions. The move comes as the North African kingdom is grappling with the impact of the coronavirus pandemic and a political upheaval that saw Parliament's long-dominant moderate Islamist parties suffer a crushing defeat in recent elections. And a high court in Kenya has ruled that the government's plan to impose a minimum tax on corporate sales, even when a company reports losses, is unconstitutional. The ruling comes as a relief for companies that were wary of paying the 1% levy on total sales from the beginning of 2021, even as they had to cope with the economic fallout from the coronavirus pandemic. It is a blow, however, for President Uhuru Kenyatta's administration, which was looking to collect at least 21 billion shillings annually from the measure. It will be yet another income stream to go towards the plan to narrow the East African nation's fiscal deficit to 7.5% of gross domestic product in the year through June. Kenya is looking to raise money to fund its 3.03 trillion shilling budget to help it recover from the pandemic following an economic contraction in 2020, the first in nearly 3 decades. And a court case filed by a losing bidder in South Africa's emergency power program threatens to delay the provision of the electricity by months as banks remain hesitant at providing funding because of the risk of an adverse judgment. Officials are 3 of the 7 preferred bidders selected to provide power by August 2022 said the lenders are refusing to sign off on the projects until the court case is complete. The case filed in South Africa's High Court by DNG Energy Limited, which alleges corruption by government officials, was earlier this month postponed until November 30. The deadline for financial close of the projects proposed by the 7 preferred bidders has been set at September 30 by the government, already a delay from an initial July 31 requirement. The delays mean there will be little imminent relief from intermittent power cuts imposed by state utility Eskom Holdings Limited. Oil market prices rose in early trade as analysts pointed to signs of U.S. supply tightness ending days of losses as global markets remain haunted by the potential impact of China's economy of a crisis at heavily indebted property group China Evergrande. Brent crude gained 52 cents to $74.44 a barrel, having fallen by almost 2% on Monday. The contract for West Texas Intermediate, which expires later on today, was up 61 cents at $70.90 after dropping 2.3% in the previous session. Global utilities are switching to fuel oil due to rising gas and coal prices and lingering outages from the Gulf of Mexico after Hurricane Ida that implied less supply is available. And on metal markets, gold prices held steady in early trade, buoyed by a subdued dollar, although price auction was limited as investors awaited the U.S. Federal Reserve policy meeting for more clarity on its tapering plans. Spot gold was little changed at $1,764 per ounce, while U.S. gold futures were up 0.1% to $1,765 per ounce. The U.S. Central Bank concludes a two-day meeting on Wednesday. Some market watchers believe it could announce tapering of asset purchases in the fourth quarter and as a result push gold lower. Elsewhere, silver edged 1.2% higher to $22.51 per ounce. Platinum climbed 1.3% to $922.34 per ounce, while palladium rose 1.1% to $1,905.67. And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Uwagu.